Hello trader, this is yourtradingblend.com. My name is Frank and I'm very happy to see you online. Today we discuss about the question how to identify the market's direction. For this question we prepared 4 approaches for you to identify market's direction, which you can see here listed, and we will do this in a live chart. But before we start, please feel encouraged to subscribe to our channel to get updated, to get notified if we upload a video about tips and tricks of trading, about our trading strategies and about our daily forex. Now let's get directly into the charts and identify market's direction. Have fun and enjoy. Hey again, and thank you for staying with us. So now we are here in the Euro US dollar chart, and we identify now with the most simple and most pragmatic approach for today what we identified, or how we sometimes, when we are too deep in the charts, identify the direction of the market. It's the what you see is what you get approach. So what we're doing is we're looking at the left side of our chart and comparing it to the right side of our chart. So if the price here is moving upwards, I'm using the trend line tool here to demonstrate this. So if the price is moving up, we are saying the market moves up. This is actually already all, and we don't have to make it more complicated for now. This is the what you see is what you get approach. Look left to your chart and look right to your chart. Compare the price levels and decide if the market is going up or down. Based on that decision, you can plan your trades, you can plan your setups. As said, most simple, most pragmatic, and what you see is what you get. So let's get straight on the second approach. The second approach, what we said is we are going with moving averages. The moving average of choice is the 200 periods moving average. So what does it say? So it's the average of the last 200 periods on the chart you are. So we are here on the H4 chart, every candle 4 hours. So 200 periods of 4-hour candles are here averaged. There is discussions about which one is better, simple moving average, exponential moving average, or whatever. So usually we are taking the exponential moving average because there we get an exponential softening or smoothening of the moving average towards the latest period. So this is the most current one. It makes for us sense. It makes for me sense to use it. So what I'm doing usually, I'm going to the indicators and putting me in a moving average. I take the exponential one. You can also take the simple one. That doesn't really matter. There's just a different algorithm behind, just that the last periods of the 200 periods, so that the most current periods are weighted more than the earlier periods. So you draw it in and you decide where the market is. If the market is below the moving average, you decide for short trades. If the market is above the moving average, you decide for long trades. In this kind, US dollar, Swiss franc is on the short side of the market, and you can identify short setups. Be a little bit careful if the distance is too long or too far from each other, because with the moving averages, the market, it's just a mathematical thing, is always bouncing back at one point to the moving average. At one point they are meeting again. So if you are too far away, there might be that the market is correcting at the one or the other day and going against the trend for a little while. Okay, so that's our second approach. Also simple, just implement the moving average into the chart and decide based on where the market is, if it's above the moving average, long, if it's below the moving average, short. Let's get straight to the third opportunity. So this is about price structure, and for this I recommend just use the rectangle tool and then mark yourself out the swing highs and the swing lows on the chart. So let me shortly do that. It's going meanwhile already pretty fast. I'm doing this already a long time, and believe me, that sooner or later you will not do this exercise anymore, because you will get an eye for this. You will get experience in how the charts are looking like and where the moving or where the swing highs and swing lows are, which are important for you. There is also no fixed rules. It is just a kind of how you define it for yourself, what you think is significant for yourself. Here is pretty much too many swing highs and too many swing lows I chosen, but it's just for demonstrating you how to identify the market's direction. I mean, the first method we show, what you see is what you get, and you say here, okay, the Great Britain pound, Japanese yen, it is moving as well up because the left side of the chart is lower than the right side. So this is also generally you are right. But here we are now a little bit more detailed. We see a little bit more price action on that one. And here as well we compare now. Do we get higher lows and higher highs, or do we get lower lows and lower highs? And based on this we make our decision. So here actually are three phases. We were starting here as well, I would say, from a very short downtrend. When we had lower highs and lower lows. Then we were turning into an uptrend, getting higher lows, higher highs, and then now again the market seems to make a top and turning around, maybe as well not, and therefore you can use now as well the opportunity and connect here the latest swing points together, and you see you get 3 touches already on a horizontal line, and you get 3 touches on the lows on the short side or on the support side. So this can also, you can also see the market went now into a range. It left the uptrend, at least for the time being. It doesn't make higher highs and higher lows anymore, so it's ranging a little bit, and we will see what happens if the market is further respecting this range, if it breaks to the long side or if it breaks to the short side. So actually this is what price structure is about, and by having that said, it's a little bit you can also quite easy spot, but easier you can spot it if you now still add on top of that trend lines. So actually this is then the fourth approach. So we are using price action to identify swing highs and swing lows, and then we're using trend lines to visualize ourselves the market's direction, so that at a glance we can immediately say when we open the chart if we need to look for short or long setups, right? So now let's go to the trend lines and go to the gold chart. Again, here the what you see, what you get is telling us it's going short, but you will see that our assessment with the trend lines now is getting slightly different, because you can see at the very right side of the chart that maybe the trend has moved into an uptrend. But nevertheless, what you see, what you get is the overarching trend might still be down, but at the moment we broke structure, and you will see this in a second. So again, we use our approach. We take here our rectangle tool and mark them. It does not have to be too specific. It is just a kind of a, just make yourself an overview what the market was doing. And so this is still another level of visualization what you can do for yourself to make you the Forex life a little bit easier. And remember, trading has to be simple. Your strategy has to be simple, because the trading will do a lot of things with you that you cannot still afford it to have complex rules, right? So you will need to take care about money management. You will need to take care about the trade planning, and so on and so on. There's a lot of stuff to be doing while trading. So therefore, market direction identification has to be simple, and therefore it cannot be complicated. Nevertheless, be sure that you always draw the trend lines in the same way. And how you do that, it will come the next days in another video. I will show you how we are drawing, or how I am drawing trend lines. And is it right or wrong? I cannot tell you. I think there is no right or wrong. There's no definition about that, nowhere written. Some are using the close prices, some are using the extreme prices, some are using a special algorithm behind, whatever. But it has to be obvious, right? The trend line has to be obvious, because only when it's obvious, only when many people are seeing the same trend line or a similar trend line market, you will find value points on a chart where the market starts to move. So therefore, important is to draw it always the same way. Not so important is what your rules are. Okay, so but I'm usually a fan of drawing them through the through the extreme prices. So I will always use either the high or the low of the period prices to draw a trend line. And you see we had been in a trend, in a downtrend until last week, I think, or was it even, no, it was last week, I think it was on the 14th of July when we broke the trend line. And also price structure is confirming this. It was already earlier confirming that already, but nevertheless sometimes you also have a kind of a complex correction, and then the trend line still keeps, and it turns again into short, but this time not. And here we can already now approach a second trend line on the chart, which is now up, which is invalidates the short trend line here. So this is why we are taking this as well out here. And so now the market seems to be long, and we're looking for long setups. Okay, so let's do a short recap. 4 opportunities. What you see is what you get. You just look left and draw with your eyes a visual trend line and compare the price on the left side with the price on the right side of the screen, and you make a decision if it's up or down. Number 2, we use the moving average, the 200 moving average, and saying here now the market turns long because it was breaking the 200 moving average, and price is now trading above it. So until today, or yesterday, it was yesterday, July 18th, the market on gold went long also according to the 200 period moving average. Number 3, you still see here, it's the price structure. You make swing highs, swing lows. Decide if you have higher highs, higher lows for an uptrend, lower lows, lower highs for a downtrend. And last but not least, the trend line to make a visualization. So if you come back to the chart tomorrow, you see the trend line is going up. You say short, no, not short, long market. I'm looking for long trades. Okay, so I hope you enjoyed the video. If you like what you see, please subscribe to our YouTube channel. This enables you to get notified when we're uploading new videos about tips and tricks, about strategies, and about our trading setups. Having said that, thank you again for watching. Have a good day, have a good evening, and speak to you soon. This was yourtradingplan.com. My name is Frank, and see you soon. Bye bye.